Most important thing is we finally got a red inside day, and I'll take it. It's at a pretty key level. Earnings after hours, we're going to have to spend some time on. We have to talk about the breadth of the market as well. But I don't mind that we're stopping at this level. It's not really the worst thing in the world for me. I actually would rather it stop, slow down, have a little pullback, and go from there. We're going to talk about the breadth of the market in a second, what it's doing. But I just think we should go through the top hits. For example, if we take a look right from this peak, which is the top, you're still above that peak VWAP. And as I like to say, you got to be careful where you put these because you could just VWAP all over yourself. If you look at the low, you had this pinch, you did the undercut, and then since then you've broken to the upside. This is where it gets super interesting because it's like, are we going to see an equal and opposite reaction to the upside that we saw the equal and opposite reaction to the downside? I'm not so sure that I'm buying that logic. For me, we have more certainty here than we've had down here, and that certainty seems to be increasing. And as that's increasing, we're also seeing that happen with the VIX. 27.5% of you do not subscribe to this channel, and yet you watch these videos for the past 30 days, which I find fascinating. They are all linked together. I would recommend that you click the button for subscription and all notifications. This is you. This is the guy she's telling you not to worry about. And as we can see, the VIX is actually down from where it opened, closing at 2365, way off this 60 level. Huge thing going on here right now, and I think this is super important. A lot of people can't see the forest through the trees. This is from the newsletter. But a lot of people can't see the forest through the trees. What I always like to do with this stuff is just take a look at it, and then from there, overlay it with the actual index. So instead of just guessing, what you do is you take the VIX, for example, and then you take the S&P, and then you just very simply go to this, click over here, and then I'll tell you where you want to move the pane to, above or below. It doesn't really matter. But what you'll see is you'll start seeing these spikes, and then when you see them, you can overlay those spikes so that you know how they acted in those areas, and is that something you want to pay attention to, or is it not? Let's just drop it to a weekly, make it a little easier and get a little longer term. Here's 02 coming across. You can see obviously here in 99 and obviously the great financial crisis. But you see all these little spots right here, and everyone, every single one was the end of the stock market. Every single time the stock market's going to crash. This was Japan yen, stock market's going to crash. What do you do every single time that this happens? I mean, all you have to do is have a long-term outlook, and it's literally the simplest indicator in the world. Anytime you're over 40, I think is what they say, just start buying if you're looking out a year. And historically it works. You just have to be able to scale into it through a barbell. And we've gone through that in some detail. Hopefully that you've watched these videos enough that you've seen me when I've done that. I just kind of walk through that barbell strategy, how to scale into things. And it makes a huge amount of difference. But for this part of this video, let's just stick with it and go from there. You're much lower. You hit the lower low. If you were going to rally, today's the day. It didn't rally. They didn't buy puts on the indexes despite what we're saying. Kind of interesting that they didn't do that today considering what's going on out there with the yields rising. The FOMC is Tuesday talk. Wednesday, we're going to have Itchy speak. We'll have to go from there and figure out what he's actually saying. That should be a lot of fun for us. If we take a look at the DXY, we're really struggling with that 100. I do think it's important to note that since we broke over here, the ES and the S&P 500, I'll just say it that way, it's not going higher anymore since this happened. So do we really need to start watching the dollar? Maybe we should just kind of keep our eye on this, because since we bottomed here on April 17th, we see that the market in and of itself has just kind of been on a tear, hasn't it? And we can all see that, but pardon me. But we can kind of see this level right here. You had the one down day, and since then it's just been ripping. I obviously think it's connected. I mean, institutions from international, such as the Norwegian bank that sold a lot of stuff, they're not going to come back in the market unless the dollar stabilizes. There's no reason for them to buy U.S. equities unless the dollar stabilizes, because then it has to go back into their own currency. It's not worth it for them. So we need to watch the dollar and just make sure it stabilizes. And once that happens, you could see institutional flow come back in. But again, it depends on the crowd you're in. If you're in the dollar's dead, it's never going to come back. Okay. There's not a lot I can say to you about that kind of stuff. There's just nonsense, and then there's nonsense. So if we take a look at the breadth of the market, this is really what you're looking for. And it really doesn't get any better from our perspective, because the 5, the 20, the 50, and the 200. But the 5 in and of itself, if we take a look here on Friday, and these are Friday's numbers, just FYI, when we see this, we got up into that 82, and then it kept going sideways. Well, how does this go sideways on the 5 if you go higher and the 50 goes higher and the 200 goes higher? rotation. This is actually what bull markets do. Bull markets rotate. And when they rotate the 5, you'll get some names that will drop and some names that will go up. But meanwhile, they'll keep going up through their 20, their 50, and their 200. That just makes sense if you think about it. As they're down, as they start rolling over on the shorter averages, other ones are going to start breaking above the longer term averages first, right? It just makes sense if you think about it. And you can see the difference throughout time. So for example, if we were to look at this and say, well, this is the 23rd, and what happened here? Oh, well, we spiked up and then we flatlined on the 5. Well, what happened during all that? Oh, well, all these started rallying and kept going higher and higher, but we flatlined on the 5. Oh, that makes perfect sense. And then what happens is you'll start flatlining on the 20 after a while, and then the 50, and then the 200, and then the cycle is complete, and then we start all over again. But this is very different, and I just want to just point this out. This is very different than something like this where you're up, you're rallying, you're coming back down. Like, it's very different than 22 or anything like that that happened during 21. If people are trying to compare this, well, this is just, you're trending down at the same time that all of this is trending down, at least the 200 and the 50. It's pretty clean, right? And then you have your ups and your downs here. That's not what's going on here. Matter of fact, it's the exact opposite. If you really want to get super technical about it, you're actually getting what I would call positive divergences on these. And I'll show you what I mean by this. You don't have to believe in them, and that's okay. It's not going to hurt my feelings. But you see where you're at right here, 63%. So when the market was here, 63% of all stocks were above the 20-day moving average. Where are you now? Oh, you're at 87%. So we're in the same area, but the breadth of the market, stocks above their 20-day moving average, is actually stronger here than it is here. Is that good or bad? Well, obviously it's good because the breadth of the market is increasing. And you could sit here and take a look at the same thing. Here's 42% in this area, and now you're at that 58%. 50 is your cutoff. We went over this on Saturday. Saturday's video was shared a lot by you guys. It shows me who shares and how many shares and everything. So I greatly appreciate you guys popping that into like your FinTwit communities or wherever you guys hang out, need hot pockets. I do appreciate it. I got a lot of great comments and emails on how people found that helpful. But again, same thing here. This is kind of interesting, isn't it? The 200 isn't there. Is that good or bad? To me, it's bad. I would like to see the 200 start to lift and power through that. But am I being picky? Maybe, because the 200 obviously takes longer. But to me, that's still bad. Now, you got to get through Tuesday and Wednesday, and then we have to go from there. More important, we have to get through Wednesday. But looking at the 50-day, we should feel pretty good about the market as a whole. If we do the simple things and just take the S&P and just drop in the main things, and we just go, okay, well, what are they doing? The main things, the 12, the 22, the 55, right? Just simple moving averages. We can drop a 200 in here, and now use a 12, a 22, and a 55. You should use what you're comfortable with. And you know, you got that Death Cross crew, and they sold in here, and ask them how that went. Not very well. Probably the least most effective thing that you can use is a death cross to actually trade off of. Like, there's literally nothing worse that I could come up with. 8.5%. What you really want to do is watch after the death cross and how you act in the pocket. If you start rolling on the pocket, and let's just say that, we'll just pretend this is a drilling tool, and then all of a sudden you start dropping like that. I don't know why that didn't work. Oh, I think I can click this. There we go. Yay. And then all of a sudden that starts dropping like that. Then you have an issue. Oh boy, getting crazy. So then that's the kind of thing that you have to worry about. That is just a god-awful drawing, and I don't really have time for this. But there's sometimes things just, they're going to eat up at me a little bit, and we're going to have to just spend a moment and fix that. Okay, all right, now you're seeing how good I am. All right, hold on. We're going to get rid of that, and we're going to click on that. Sorry, guys. Sometimes you just got to go for it. There it is. That kind of movement. If we start to see that, you're hitting in here and you're rolling, well, that's not going to be great. It's certainly not going to be the cat's pajamas. So that's definitely something we're going to want to watch. But for now, we're over, and we want to see how we're going to act in that pocket and then kind of go from there. All right? I do think that's important. I do think we need to watch it. I think we have to watch it on the NDX as well, because the NDX hit the 200 and it stopped. So the question is, are we going to go higher? I would have to say I think so because of the breadth of the market. Do I know for certainty? Am I going to sit here and say we're going higher? No. Why? Because nobody knows. Look, all this is probabilities. That's constantly what we do for a living. We assess probabilities. We look at things, we assess how they act, and we go from there. That's all we can do. When we see this, we have to assess it and say, well, we are above the 55. I understand the volume's not there. We would look at the 200 and go, well, we hit the 200 and got matumboed. So how crazy do you want to get in here? I don't know. Maybe not too crazy. And then what we might want to look at the breadth of the market, which we just did. But you could always go and take a look at the breadth of the market. For those that don't know, you just go NDTH and just stocks above the 200-day moving average, right? And same things for the Nasdaq 100. You can go look up for the S&P on TradingView. So we go look here and go, go, okay, well, we're at that 50% line. Once it flips, it flips. So we are in good shape here, but yeah, we have to watch that. I think it's more important. See, when you're trendless, which you really are trendless right now, the way that we're acting, we're not in an uptrend. We're in this downtrend that is trying to create an uptrend. And what it's leading to is just what I would refer to as just kind of crazy basing. So I tend to not use moving averages as much, and I just want to know where the players are. And so I can see that we're above the peak VWAP there. The other thing I would use on the NDX, which I find super helpful, is just to drop the volume profile on the recent peak and just see where everybody is and go, oh, okay, well, here's point of control. There's the low value area. Here's the high value area. So if I can flip that, cool, that would be great. And that gets us what? Up above here. So these are the things that we want to focus on, and I think that they're important. The other thing I would say to you is we did see volume today. Let's take this down. We did see volume today on the stocks, but does this look like something that we have to get involved in? I mean, if this was any other thing, you'd be looking at this and going left shoulder, head, right shoulder, neckline, retest the neckline. This is where I need to short. We're not doing that. We're saying, oh, they're back in semis, which they were today. They did get back into the video. We did see some of that, clean all this off. But does that look like it's going to rip? Not necessarily. I mean, you have a lot of issues there, don't you? You can see them for yourself. I'm sure you saw the DTL right here and how we kept hitting it. That DTL is actually getting lower and lower. See, the one thing about when you find your actual angle is you just take a look at that trajectory. You'll find it in a couple different places. Say it, how it's right here. And what you're doing is you're constantly cloning it, and then you just kind of see where it fits. And sometimes it fits in places. Isn't that a miracle? A little Christmas miracle right there. And then other times that it will not. See how it popped out, popped right back in. 3 to 5 days and still in the same channel. So if you look at this, it looks like a fork, and some people use that fork, and you can actually even do this with it, right? Just move it all the way the heck up here. You can actually make this a little tighter because you really want to use the bodies, not really the wicks. And why don't we use the wicks? Because wicks are price rejection. You got this. So when we see this kind of stuff, we want to pay attention to it, right? So, I mean, that is clearly down, and clearly every area is having an issue. And then you go and take a look at stuff like this where you have IGV. Now, this is where it gets interesting to me because IGV can lead. Now, if I take IGV and I look at it over all this time, you're going to be like, man, this thing's a monster. Well, IGV and the SOX tend to move together. And so you come here and take a look at IGV and the SOX, and you will see really clearly that when you go back over time, like, my gosh, like, yeah, these things were in tandem. And then we went through that pandemic, 1.7 trillion injected, and then you can just see the outperformance in this area, which is pretty rare for that to happen. So then you go to 2020 and just look at that outperformance, and you can still see it. And so when you see this, you can understand a little bit. Let's get rid of the pre and the post. You can understand a little bit, why IGV might outperform for a little bit here. We'll go back to 24 here and you'll see it. That's not crazy for that to happen, for IGV to lead over the SOX. And so they would be the names that I'd be more interested in. And you can go look at the top 10 holdings. If you're in the community, you already know we're all over this. But that means to me that we do have a leading sector. So going back to our original question about the NDX and saying to ourselves, let's clean all this off. Going back to our original question about the NDX and looking at it this way and going, all right, well, do we care that the NDX hit the 200 and can't get above it? Well, we're above point of control. We don't really have a leading sector, but we could say that the extended software names, that the majority are in the NDX. If you broke out the 100 names, they're above. And then we could go here and say, okay, well, these names are approaching that 50% line, and they're above. Another indicator I use to kind of give me a clue what's taking on, and I went to go over this on Saturday, but I just really ran out of time in that video. And I will link that video at the end, and I'd recommend that you watch it if you have not watched that video, because there's a lot in there. But if we take a look at this, once I get above the 55 Qs relative to the SPY, and then I can just do this with it, yay, and we're above. Once I break that, you see how you broke it here February 24th? I don't really buy tech. I mean, I'm just gonna save you a lot of time here. I don't really go crazy with long-term tech, like swing trade tech, I should say, until I flip this, because this tells me that the Qs are outperforming the SPY on an institutional basis. That's how I view this. You should view it however you want to view it. But if you looked here and said to yourself, all right, if I sold the Nasdaq here and I bought it here, how did I do? If I sold the Nasdaq and bought the SPY here, how did I do? Well, you made money. So in other words, if you short, right, if you were short and long, just to kind of put it in perspective, from here to here, what did you make during that whole time? Well, you would have made 2%, roughly. And then, of course, it flips right here. But once this flips, it's telling you hey, you might want to take a look here. Just like it did here in December 2nd, et cetera. You can see areas of interest. This is when I start looking a little bit more at that kind of. This is no different than what we talked about. If you, again, follow these videos, no different than what we talked about with Bitcoin Gold. When we were talking about Bitcoin's performance with gold and how that was playing out on the hourly, one of the key things that we kept talking about, get rid of that for a second, were these key levels and how we kept hitting these key levels. Let's go to a 4 hour because you can really see it there. And it doesn't matter if you're looking at it from Bitcoin through gold or gold through Bitcoin, but when you saw some of these trough valuation levels where you were holding before, where they were kind of bouncing around, it told you in here like, hey, Bitcoin's getting ready to make a move because it couldn't break that level. And you see how it is in here and then how that level became a launching pad. So you're basically coming off that level again. That's why watching breakouts in those areas are so important. And you can do this. I'm going to tie this to another process in a second here that would have probably helped you a lot today. So there'll be a lot in here that'll help you for tomorrow. But if you watch this kind of stuff and you watch these kind of key levels where they become launching pads on a relative basis, whether you're using some kind of moving average or you're just looking for those turning points, it can tell you like, oh, hey, they're going to reassess their situation. And why are they doing that? They could be doing it based upon computers or it could be charting human behavior. I'm not going to get into it all. I'm just telling you I use this and it works. And if you go and take a look at what happened to MSTR since about the 8th on that chart, I mean, it's pretty obvious what's going on here and you can see it for yourself. This was something we bought at like 317. 318, something like that. And you can see right in here and how that would have tied to the other chart pretty clearly. Christmas miracle, how that works, right? So you're looking for this relative performance that's telling you where to put your chips. I think that's really, really important for people to get. I have some other concepts here I should really go over. I'll just throw this out there because this, well, we'll do it through the Qs because that'll be the easiest way to do it. So if you come here, you drop to the 1 and we'll just clean it all off for a sec. People say, I don't day trade. It's got nothing to do with day trading. It's just you want to understand where all the players are at all times. Because if you don't understand where they are, then you really don't know where you're supposed to be. I mean, it's really that clear. So if you go back to Friday, you see that breakout right there? So that's the 830 breakout level. You never got back there. And then what you do is you mark off that 830 bar from that Friday. And just want to you mark the 1 or you can mark the 5. I always start by marking the 1. And I just find it very helpful. You can also mark the close of the 1 from non-farm payrolls. And you can also mark the open of the 1 and the low. And then look how you hit right in there, and then you'll see it over in time. Sometimes it will follow the same pattern, bonk, 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 bonk. And then resistance becomes what? Hits it, and then it is support. And then at the end, look where you stopped again. Same exact levels. Really important concept, guys, because it does make a difference. If you were trading futures, you should have been watching those levels all day today. Whether it's the ES or the NQ, it doesn't really matter. Those levels are there. So you're looking for those, just looking for those inflection points, and you can see them here, and you just mark them off. For someone that's trading futures or zero-dated options, if you're not doing this, I can't help you. Like, you need to do this. It's because it tells you exactly where the algorithms are, and that's just such a huge thing, especially in today's market. And you can mark that off with the open and the high and the close, mark all 4 points off if you wanted. But then again, you watch this and you're like, oh, okay, well, now we're hitting there Sunday at 8 o'clock. That's the level where it starts fighting. And it's the level that's tied directly into that 830 non-farm payrolls. Tries to flip, retest, can't, tries to break down, and it holds that area again. Worth noting, guys, I can't be any clearer about that. It's definitely something. Other things that I think we need to address before tomorrow's opening. PLTR is all over the place tonight. I think personally it's because this is my personal opinion. It was a really good quarter. Like I didn't see anything wrong with it. I think that what's happening is the expectations were so great. You're at all-time highs going into the quarter. You actually popped up here. I actually did a day trade on it, but you had to be like insanely. But now you're Hing, and the question is, do you break the H? Don't you break the H? The time recording this, the conference is going on. I don't see a problem with the conference whatsoever. I don't see any issue with anything that he's going to say out there. You never know, him and that crazy hair, but really good book he wrote, by the way. It's worth reading. But I do think that it was a great quarter, and I do think that it's something that you should pay attention to tomorrow. A lot of these names are breaking down and then running again, and we're seeing a lot of that. I like the quarter. I'm long the stock. I didn't short anything after hours. The other one I liked a lot, and I can see why it's down a little bit, because of the quarter-over-quarter growth coming in, but they raised the EBITDA and they raised the year guidance. I think people are not truly getting what they're doing here. This is one of those names I'm going to start really paying a lot of attention to. I have a position in this, and into this, I wanted to hold it. I wasn't up enough, so I just married puts to it. No matter what happens tomorrow, here's what I really liked about this. They are trying to get as much distribution and as much subscriber growth as possible. This is the same exact model in so many ways that what Amazon did. We went over it in the public pre-market. I'd watch those. I actually like this quarter, and I like the way that it played out. I would watch both these names tomorrow and go from there. But you have some big dogs this week, and Wednesday we have the FOMC. If you haven't watched Saturday's video, I would most certainly watch it, and here it is at the end of this video. That's it.